Shall we start?
Yes, we shall.
Let's get into it then. What do you want to start from?
I want to start from last week. What a week, right?
It was an amazing week for most markets, but let's take a look at the commodities market to put our focus somewhere. What do you think about gold? What was that? What was that whole thing?
I don't know. I mean, we talked about the probability.
We actually did. I hope people who were watching us got a glimpse of what's coming. I mean, we did our best to warn you about it, but...
So during the Asian session on Monday, gold reached its all-time high, and it was traded at 2,149, I guess. But then it started a downtrend, and right now, as the week is finished and wrapped up, the last price was like 2004. It had a very interesting week, but I think the things that have happened confused me a lot because, I mean, in my point of view, I thought that if gold reaches all-time high, it's going to stay there for a while, but it didn't. It came crushing back down. So
and it was in the middle of the day. It didn't take gold half a day even to reach the highest highs and just drop that from there. And I think, and up until now, we've lost 7% from the price of gold, and this really showed that you're sharing this confusion with everyone else in the market that don't know where exactly they should put their money.
Exactly. I think this volatility in the price of gold and it's the price going up and then it coming down showed us two things. The first thing is that the potential that the gold has to go up if the conditions are right. And the second thing is that rushing into the positions of buy because you thought, or as I myself thought as well, that the Fed is cutting rates because that was the narrative. Also, I think there were some factors that helped sentimental ones because things happened.
The geopolitics side it was a weird day geopolitically for gold, and of course the Fed narrative is also in the play here. But I think the main derivative there was the geopolitical fact. It was very few things happening, small stuff, but many of them around the world. So it was creating the vibe that we're here for a longer run of gold. And I think some people might have enjoyed the write-up, but maybe they did not see it coming down so fast. And I've heard from the technicalists saying that this is how usually gold behaves, it just goes there, mark a certain price and just gets back down, plays with it, tries, with the volatility, and then it reaches eventually we'll see that point again, but we do not know if a lower low is coming before that, or is it gonna jump back up?
So in my opinion, what happened was less of geopolitical factors and more of the scenario for the rate cuts of Fed. I think that was the bigger driver, because if it was the geopolitics, it would have stayed there for much longer. And the fact that the fear passed away quickly and then it came down. So I in my opinion, it makes this week more difficult to predict what's going to happen, because this week we have the rate announcements, and then we have Powell's speech at the press conference. We have the CPI, and last week we got the NFP and it was higher. So it's just more uncertainty about the price of gold. But I think it's going to be much more difficult for the buyers to get into positions this week as well, because they got the NFP and the CPI is predicted to go higher in the core version, I think a little bit higher, but the headline version is predicted to stay unchanged. And then we have, because of the NFP, the market is thinking that, okay, Powell probably is going to have this hawkish stance. But what we have to take into consideration is that this week we will have the new dot plot and the new projections. I think that is going to be the main driver of the price.
Dot plot has proven to the markets that could change the whole scenario. But I would like to get back to what happened on Monday this week. Remember, when we were talking about the coming week's forecast, we were mentioning how Powell said nothing on its previous speech, and that was the main mover of the markets, knowing that Fed has nothing else to play here and is kind of done in the markets. And I do think that geopolitical reasons were small, and they had like a small effect on what happened, but it's because they went away so quickly.
Yeah.
And while they were happening, market was reacting. But then they because the whole market is so sensitive to what's happening to the dollar, because I feel like this is a decision-making month for the traders, and maybe even the banks and whoever is waiting for Powell to say more about what's going to happen in the coming year. So I think on Monday people were ready, so ready, because we've passed Fed's speech without nothing new, and then there was a geopolitical reasons to be cautious about where your money is, and then suddenly everyone realized the Fed is not done. The Fed might not be done, and what the data that we got this week, it actually proved a point. Right,
I mean, half of the
point.
data, but some of the data,
the ones that matter, I guess.
Yes, the ISM and also the NFP showed that the economy is still very resilient. And if you go to the details of NFP, it showed that most of the job gains or the jobs added were for the services sector. So, in my opinion, I think the paradox between the economy being, for example, resilient and the workforce in some cases being much more toned down, I think this created an uncertainty.
That's an interesting view. But what I heard from you right now was that we got the services part, like the reason that we drove NFP so high was the services part, right? Is that true?
Yeah. So from the healthcare and the government sector.
And also all the strikes that were finished.
Exactly,
that also
they came back to the.
So in the coming week, we have ISM's services PMI, I think, and I think then does that mean
no, not ISM?
Is it the manufacturing?
We have S&P.
The PMI.
Yeah, true. The S&P Global
but
PMI.
Still, since we got the NFP numbers higher because of the services sector, we might be seeing the same with the results this week as the forecast and the predictions show so.
Yeah.
I think it's like around 52 that they're expecting this month.
Yes, exactly. And also there's this thing that we have to take into consideration. Always the services sector of the economy for the US is way more active than the manufacturing, and the numbers drive the market much more. So in my opinion, there is the possibility of PMI going higher in the services sector, but I don't think this week PMI is going to be the main driver. If you're talking about the data, I think
you're going Fed,
CPI. I think these two are much more important.
What are the forecasts for the CPI this week?
As I mentioned, I think the core CPI is predicted to be a little bit higher, from 0.2% to 0.3%, but the headline is predicted to stay the same. So the thing for me is that the main driver other than CPI is going to be the dot plot, because we have to see what the FOMC members are thinking about the rate cuts. Now the NFP gives Powell more reasons to stay on his hawkish stance.
So many in the markets believe that Powell could not have any other moves than being hawkish. So yeah. I think this is something that is widely believed in the market right now, that we're going to hear Powell talking more hawkish to the markets. And I think that's going to be the main driver. I know that the CPI is going to be out this week, but I still think all the market's attention will be to his speech. I think we'll be covering that in the studio later.
Yeah, exactly. We will.
What I really want to talk about is how markets are, based on what they believe in, pricing more cuts in the coming year, as Powell is mentioning each and every time how it's not going to be like that. But markets think that he's done doing what he was supposed to do, and at this point, it's like out of his hands. Even like everyone is pricing that, and even we see in other countries basing their basically politics on what's happening to the U.S. dollar. So it's like, really, it might be out of his hands what the market believes at this point. I think a lot of the talks in the market around gold is also being driven by this. The fact that now with the labor data that we just got from the USA, we might see less expectancies for the cuts earlier.
Exactly. I think what the NFP did, it pushed the expectation for the rate cuts a bit down. I think people were expecting, even in January, 16% of the future money markets were expecting like the rate cuts to come way sooner. But then the NFP helped the expectations to go. I think now it's in May. People are expecting.
I've heard March.
It was March before the NFP. It was January or
so
March.
that makes sense.
Yeah. And then what's interesting is that usually the predictions of the rate cuts by the market is not really what's happening in the actuality of the rate cuts. And a lot of the economists don't think that the numbers are going to be that high, because some people believe that next year about 1.25% of the hikes, will be down. So that's like a lot. But the economists don't think that's going to happen. Maximum half a point.
I think it's generally the sentiment of market who wants to predict things prematurely, and this is the word exactly what Powell used. It would be premature to think that we have won the battle with the inflation, but it might also be for other reasons, that he might want to keep the strength up and like the dollar higher for like as long as he can. I think the scenarios for soft and hard landing is again in the markets they're talking about it, because the light at the end of the tunnel that everyone keeps seeing, I think that whole picture now depends on the more data from the labor market, because like the recession scenario that they're talking about could actually hurt all aspects of the market, being it stocks, the dollar by itself, and other markets related to this.
Yes.
So this scenario would, from what I gather from the experiences from past recessions, has two components at the same time. If we see this, there is no hope. One is the labor market data weaker, but I mean way weaker. What we have experienced until now, it's not weak data for the labor market. It's still in the range that is expected.
Healthy.
Even the unemployment rate, we just saw it with the NFP, we saw 0.2% lower. It's ticking lower, and this is actually what's giving markets hope for this scenario. But at the same time, there is the second fear of inflation coming back. Once the Federal Reserve keeps the rates, at a stable level, there's this chance that the inflation might come up. Why? Because we are having the stronger labor market.
And
we're seeing the wages still growing, and this is what market cannot anticipate. Like the confusion that you were just talking about in the beginning of the show, I think this is that, because we do not know if we are done with inflation, because we're getting like higher labor data. And I think this is the main question these days.
I think about the labor data, I want to add one more thing and then we can pass. The data shows that in comparison to the beginning of the year, of course, the labor market has softened and the activity is much less. But compared to the whole scenario of the rates of the federal fund rates and the activity of the economy, the FOMC members and a lot of economists expected like a smaller or a less active labor market.
True.
And I think that has had a lot of impact on the view of the inflation, as you have mentioned. But I think the core inflation, not just for the Fed, the core inflation numbers is going to be very much into focus for other central banks as well. I think that is also going to be the main driver. These past few weeks or days, a lot of retail traders are extremely bullish on gold, and they want to be bullish on gold. But a lot of banks or hedge funds, a lot of big players are extremely short on gold. And I read it today somewhere that it said that be scared of the retail traders positioning, because historically the other way around is going to happen. For example, they are very bullish on gold and oil.
You mean not in the favor of retail traders?
Yes, they're bullish on gold and oil. So the opposite of it is going to happen. And the other thing is that I read it somewhere that during this past few days, a lot of the banks have had short positions of gold, and it's at the highest level since May of 2017. So that gives us an insight into the bigger players. They might be on short positions.
Maybe it's because of the inflation expectations that they are having, and the data they have is more reliable, I think, but then the normal sentiment in the market. But I have also heard about that, about stocks and the big owners and the big holders of stock, that they keep selling the markets while they're actually they're actually promoting the fact that the stocks is a buy right now.
Yeah.
But we'll get to that later. What do you think oil prices is going to play? How do you think oil is going to play in this whole scenario?
So last week I expected the price of oil to go up, but it didn't. It just went down. It touched its lowest level since, I think, July. And I think for this week, I expect the price of oil to go up again. I think there will be a possibility of it.
You didn't learn.
Yeah, no, I didn't. So there is this conspiracy theory that actually we say that there's a surplus of oil supply from the US that has an effect on the price of oil. Because of the supply more than demand, we see the prices going lower. But this conspiracy says that the EIA has started to announce the numbers of oil reserves, including the NGLs. So the numbers are higher, but the production has not changed much. And this data actually predicts that we will have less of shaling supply even in 2024. So not just that, this report, and also we have this data coming from China. We got it today. Lower CPI, lower PPI. So this is going to have an impact on the on the oil. So less demand from here. And then we also have we say less supply from the US. I think this is going to play a big role on the price of oil.
I'm going to stop you right there. I don't think the supply from US is being lowered, or...
No, they say that it's just a sentiment, that they say that the supply has increased.
They're working at full capacity, 90 million barrels a day. And that is because we have seen continuous cuts from OPEC plus countries, and they're actually forced to these levels of supply, to produce these levels of supplies, because the economy of US is working, and is working beautifully. It's not like the China data or the India data that it has recently came into the play. Like they never used to talk about India before. Now I see the supply, the demand that is coming from there. I see the sentiment, and I'm like, okay. I see where you're going with this. Once they start saying that the supply from the US is much higher, and everyone's like, oh yeah, there's going to be the surplus.
I'm saying the supply is not as high. The data from EIA has included the NGL supply as well. In the past,
so that's why
the numbers are higher. And so that report and that chart has been out recently. Maybe they factor in this data, and maybe they think that the supply...
I would actually like to take a look at that report, because I have seen that they are maintaining the gasoline levels also in the crude oil inventories that they're releasing in the markets, and that is actually the reason that why we're seeing the surplus. I did not heard it about the LNG, but I did heard about this commodity. But anyways, I think this is actually, it cannot be way far off, because I have heard about the capacity of the refineries that are coming from US, and the number that I just mentioned, 90 million barrels a day. This is not a joke. This is actually happening. And it might include other commodities as well, but they're in very close connection with each other. So I don't think it means nothing. But I do not think that the lower level of oil prices is something that is coming from the more production that is happening in the US, or the surplus in production. I actually see this lowering price of oil from the perspective of the fear of less inflation. I basically think markets think that we are over the peak of inflation, and this actually happens during the periods of recession, that the oil prices tend to go lower.
Yeah.
And then once you get like a data release that shows a little bit of optimism about the inflation, they get what the immediate react would be to short cover their positions.
Yes.
So that's when we get a squeeze, and that's when you see the price of oil shooting up. And we've experienced this during the recession of 2008. The oil was up, I think, to close to 150 a barrel, and this was the short covering actually that happened in the market.
But that's like during the deflationary periods.
So many believe that we are already in the deflationary areas.
We know that China is, but we are not sure that the US is.
I'm sorry to cut you, but I'm so interested, like I'm so excited to share this fact with you. Do you remember the GDP of USA that we got quarterly last week?
Yes.
It was 4.9 or 5.
The advanced version was 4.9, but the second version
was 5.
5.2 actually.
I was like putting all my analysis based on the facts. I was basing my analysis on the fact that GDP is growing higher. And as I got to read a little bit more about the actual effect of GDP on the economy, I start to realize that this is not actually a thing that people take into consideration for seeing the health of economy. And the reason that GDP was so high in the previous quarter, it was because of the government spending. And
yes.
this does not have anything to do with the value creating that happens in the GDP that could drive inflation higher. This was Fed and Fed only, and I think this will the coming quarter we will be seeing very lows on the GDP of United States, because the same thing is not going to happen. I think the Atlanta governor also warned about this, that the next reading of GDP is going to be way lower. So just adjust yourself to this.
Atlanta, I think they have like a tool that I think I forgot the name of it, but they have a tool that predicts the percentage of GDP, and they also mentioned that the GDP in the coming quarters is going to be lower. So in your opinion, and based on what you read, the government spending drove GDP higher.
Exactly, and that's not to be counted as a part of inflation. So this lower numbers that we're seeing for the crude oil, I think it's completely driven from the lower expectations that the markets have until we start cutting rates from the Fed. Once we start the rate cuts, as we have experienced before in the disinflationary and all the crisis that happened before in the market, we start seeing the crude oil prices driving higher because of the expectations for more production in the market. Then that actually also could be fake, because we do not know when they're going to start this and how it's going to be taken in the markets once it starts.
So, in my opinion, the impact of rate cut scenarios impacts more the gold more than the oil. I think the bigger player for the oil is the players of supply.
Definitely.
So, as you mentioned this week, do you see a scenario for the oil to go up, or do you think it will go down again?
Well, I think Saudi Arabia is in it for the longer play. And I cannot be very sure to answer this specific question, but I will tell you why in a minute, and I would like to know also what you think about it. So imagine you're working with a group of producers, and you have like some kind of deal together that once your production is more than what's necessary or what is called for in the market, you'll start losing money. And because you have this agreement, you try to keep yourself in line. And there are other players out there who mostly do not think about the prices or about your profits or about, anyone else in the market. They just want to pump more. In this case, I'm talking about countries
other
like
countries
like Brazil, like the African countries. They're hungry for more, and they do as they will, And the fact that Brazil actually recently got added to this group that we call OPEC Plus, proves the fact that the Southern American countries and the actually countries like Angola and Nigeria are a big problem in this market. But Saudi Arabia has a very powerful weapon, and that is the low cost production that they have in the refineries. So, and they have not taken back on this before. I don't think anything will stop them again to flood the market with a lot of production until the higher cost productions will be out of business, and then again you come back to the levels that you think it's healthy for the market. I think in this scenario, the longer term winner for it will be again the OPEC plus countries. Meanwhile, so many people might have short periods of success in the revenue making of the oil, but this, what I'm talking about, is not going to be anytime soon. At least
Exactly.
I think for the first half of 2024, we have a criteria of 900 million barrels extra cuts added to the 2.2 million barrels from before, which we are not seeing the countries living up to that, by the way. Until now, we have only witnessed 350,000 million barrels cut. 350,000 barrels cut. We have not seen the 9,000 that was...
But don't you think next week is not the week that these numbers impact the market? These numbers have already been out and they have been priced by the market. Do you think that will be the surprise for next week again?
I don't think it's going to be next week again.
No, I mean the impact of this data of what OPEC Plus is doing, of Brazil being added to OPEC Plus, of supply cuts, not as people were expecting, but still supply cuts that's going to balance the demand and supply.
It's not satisfying though.
Yeah. So don't you think the effect of these things is going to be much less in the coming week?
Yeah, for sure. Unless something happens again, unless there is an emergency meeting, which we've seen a lot from these countries lately and all throughout the year, actually, to be honest. But I think they're going to keep it steady for a while. And from the technical side, on the charts of WTI, we're actually at a very decisive level. 71.100. This is the deciding.
Do you think 71 is the new psychological price level?
Well, it doesn't look like a psychological level, but I think the market is showing by experience that it is acting like one, because it's been 4 days?
Yeah.
And I'm just waiting. I'm just move,
move up or
happening.
Move down, yeah. So, so there might be a scenario for the oil prices to go down again. I think one of the factors that can help the prices of the oil to go down again is going to be the dollar again. So if we see
CPI, huh?
If we see a scenario for the dollar to being to get the support and go up again, I think it will have an impact on the price of oil. So not just CPI. If we have a hawkish stance from Powell, and if the dot plot shows that FOMC members are not a fan of rate cuts anytime soon, so that's going to have an impact, and that's going to support the price, the value of the U.S. dollar. So, and that's going to have an effect on not just oil. It's going to have an impact on gold, and it's going to have an impact on your USD or currencies that involve USD.
Since we're expecting a hawkish tone from Powell, that plus the CPI that we're getting for the US dollar this week, I think we can expect a little bit of support in the charts, but nothing that would matter for the long run. We're still waiting.
Yeah, exactly. So we talked, I think we almost had our scenarios and the things that we think about the rate announcement this week. But do you have anything else to talk about? I mean, the performance of the dollar. I think there is a possibility for the dollar to go up again and to increase in value.
You also believed that the previous week, didn't you?
No, I believe that it had the potential to go down.
To go down. So what changed?
I think after NFP, I have this idea of the price of the value of USD to go up again. I think it's being supported. And I also think that another thing that can drive the demand for the dollar is the data that has come from China. Because historically, whenever we have data that is not very pleasant for the investors that comes from China, lower CPI, lower PPI shows lower demand, deflationary periods in China. So it means the outlook is negative. And when the Chinese outlook is negative, there is demand for the dollar. So that's going to keep being played. I think last week, the reason why the dollar was also performing well before the release of NFP, although we had jolts that was not good, although we had ADP that was not good, one of the main drivers was still the negative outlook of China because of Moody's rating for the credit.
True.
So I think it's going to come into play at the beginning of the week because we got the CPI, PPI data today, but the impact is going to be shown on Monday. So, and then if the CPI, especially the core level, goes up again, that's going to be another way to support the dollar. Again, if we see a hawkish stance from Powell, but then after Powell, we have Lagarde and the ECB rate announcement. Then we have BOE rate announcement. And if Powell is more hawkish than those two, I think again there is a scenario for the dollar to go up again and keep being supported. I don't see a scenario for the dollar to be pumped because we know it's December. We know that there's like the seasonal factors that's going to stop the dollar from performing really well, extremely well. But I think a lot of the market participants have learned their lessons last week. So it's too soon to think about rate cuts.
But let me ask you this. How much more hawkishness could come from Powell?
If the dot plot and his speech just makes the participants think that rate cuts will not happen in the first half of 2024, I think that's going to be extremely helpful because I think the comparison between the tones of the presidents or the chairs of each central bank is going to come into play, especially next week, because we have rate announcements from 4 different central banks. And that's where, when you just compare their policies.
Even if you want to put it in comparison with the dot plot and Powell, which one do you think weighs heavier?
I think the dot plot, but I think Powell's speech and dot plot are going to be in the same direction.
They're gonna be in the same direction. But I think Powell could not be any more hawkish because all this time that the more cuts were pricing in, he was still hawkish. True,
but
that
he didn't have reasons to be hawkish. Now he has the NFP,
and he always says that one release of data, one positive release of data is not a reason to change our outlook. So we actually, if you remember, before, like now we are seeing him more hawkish, but in the sessions before that, we were even hearing some dovish tones there. But he actually started getting hawkish, like it's been 3 or 4 weeks now. I don't think we're gonna hear a more hawkish.
Whatever that he does that pushes back rate cut scenarios, I think that's going to be good.
So I think that's going to be dot plot, though. It's not going to be him anymore because people are actually losing hope in him. I don't know. It's like the platforms that are doing him bad like this, but like people are actually losing hope in what he has to say, and so many people think that he's walking in dangerous territories with the rate cuts, and they still. I'm telling you, like. It was like about 2-3 weeks that I did not hear anywhere about the recession and about the hard landing, but now there's talk of it again in the market, and I think that
people who talk about recessions have always talked about recession.
It was less. It was way less. I don't know if you agree or not, but like the light at the end of the tunnel that I was just talking about was becoming brighter, and the only thing that could move the market in a way that matters, I think it's the dot plot.
Yeah, the dot plot is going to be the main player next week, I think. Is there anything else we want to talk about?
I think that's it. We would have to revisit the topic since we're going to talk about the
also let's just keep in mind that we have PMI for the services and for the manufacturing is not going to be as, I think, impactful.
PMIs, I think they lost their meanings the past few weeks.
Especially, I think S&P Global's PMIs is never
you don't
really
like that.
yes, because it doesn't have a huge impact on the market. I think the ones that come for the Europe is also much more meaningful. So, but again, let's just have an insight. And let's just put a scenario for the traders, how this is going to impact them. So based on history, we say that if the smaller players are extremely bullish on something, something else is going to happen. We have to take into consideration the positioning of big banks on the dollar.
Well, basically what you're saying is like, do not think what you think about.
Exactly. I mean, don't...
Or at least be cautious about what kind of biases you're promoting in your head. For this is the same thing with the specific and psychological levels of commodities and, you know, currencies, that you see it hitting a certain level and you're like, buy or sell, you know. So it's good to be reminded of that.
And also for the gold, I think there is a possibility for the gold to be lower and maybe go, for example, near 1980 and then be up again if there's a possibility. But I think the short positions will take or will have an effect on the price of gold. I do not see a scenario for the gold to see its all-time high maybe this week. Maybe there will be a possibility for it to be high in the coming weeks.
After losing 7% last week, I think more price falls are also in play for us. But I do not think it's gonna last until 1980. Is that what you mentioned?
Yeah, it reached 1996 last night.
Yeah, but that's what I'm saying. We were looking for a high, and then we're looking for a low. I do not think the low will be very low.
So you don't see a scenario for it to go below 2000, for example, again?
Maybe below 2000, but not below 1980. I think that is way too far for the higher high that we just saw in the charts, but I guess we'll see.
We'll see. So now let's take a look at the currency pairs.
Can we talk about Japan? It keeps amazing me, and every time that I think I know something,
we don't know anything.
We don't know anything.
This week, the performance of the yen really surprised me.
Did you know that it was the strongest currency last week?
Exactly. What? For 2 days straight, you would see the chart of the performance of the currencies, and all of them were red, and the yen was just doing amazing. And for what? For just some few words that BOJ governor mentioned. He just said, from now on, I think my job is going to get so much harder.
Oh.
And because of these words, yen just went up.
I think all the right ingredients are there, though. Like everything that they previously mentioned and marked, that we're actually waiting an increase in this, a decrease in that, and it's all coming into play. And with the right words from the right person, this is what you can get on a currency.
But that's what a lot of people say about Ueda. They say that you cannot trust him.
You cannot.
Yes, because whenever he says something, he doesn't do it. I think his credibility comes down with everything.
Yeah, it became with the last interventions that he did in the chart. I think it was the last one.
And I think it was a combination of two things. Ueda saying all those things that didn't really have a very hawkish tone. It was not a form of forward guidance that was very straightforward.
But it wasn't him this time. This is exactly what I meant when I said the right ingredients. We're having the positive data, and we're having the right words from the right person. So none on its own could make this happen for us. But it came at the same time in a very short time.
I think first Ueda talked, and it was the day before. I think the yen was performing really well, and the next day the data.
So he saw the opportunity.
No, he talked first, and the data came the next day. So both days yen was performing. Is it possible
that he knew what was coming?
Probably so. Who knows? Who knows how Japan.
Actually, the data that we're speaking of, we should be more clear on that. If we were talking about the wage growth, it has been growing for the past 2 months.
Yeah.
This is not something new. And even if I don't know if he knows about the data or he doesn't, we should ask him maybe one day in one of our talks. But anyways, I think this was expected widely in the market. And this is the reason that they found like the perfect time, the perfect storm to, I don't know how much is trading, USD/JPY is trading right now, but I think it's
I think it won for 148. I'm not quite sure, but I think it touched 148.47. But I haven't checked since last night because of the increase that we had in USD or the dollar last night because of NFP.
Okay, so let me ask you, how do you think this stronger yen scenario will play out in the export sector of Japan?
So first, let me say this. The yen is usually controlled by BOJ or the government. It's better to say that the government wants the yen to stay in a contained range so that it doesn't lose its value for the exports.
Right.
But also a very weak yen is not good for the economy as well. What they want, what the government and the BOJ wants, is a healthy amount of CPI that comes from the demand. So what we see in Japan is like what we see in China. Because of the lack of demand, the CPI cannot go up a lot because the wages don't grow. So what I think is going to happen to the yen in terms of exports, I don't think it's going to have a huge impact because, in my opinion, what happened to the yen last week in the last few days is not going to stay like that. I mean,
So you think it's temporary?
Temporary because
power of yen.
Yes, it's temporary because we have to see 2 more readings of the CPI or 2 more readings of the wage growth. And Yuada always changes what he says. So
True.
in my opinion, this week might not be a good week for the Japanese yen. And this week I see a potential for the USD to grow. I see a potential for more demand for the dollar. So
this is actually a battle now between yen and the dollar because actually the right components for each currency is out there. And this is where sentiment comes into play.
Yeah.
At the end of the day, I think a portion of people might consider that Yuada changes what he says, but the sentiment is going to be there, that we're going to have a more bullish, outlook on the yen. And this actually might create so many call margin accounts because, once you have not seen something solid and you think you like got a glimpse of what's going to happen, you might be in a rush and just like jump into the position, but this actually historically never works.
A bullish sentiment for the yen is very futile. In my opinion, it always goes down. So maybe at the beginning of the week, we don't see, for example, a very strong yen, and it comes a bit because the impact of the good news has already gone, and also it comes from the fact that the dollar is going to be a bit stronger. But I think something that can help us figure out the actually strength of yen is comparing it with other currencies. Maybe you could check, for example, Euro JPY, GBP JPY.
I mean, okay, then let's talk about Euro so we can maybe jump back on that. The ECB and the central bank's rates and the press conference that we're going to see from Ms. Lagarde, I think that is something that comes with no surprise that they're still going to keep their stance of neutralness on being hawkish or dovish. But I think, is it after the Fed's meeting?
Yes, it's the day after.
We can maybe
on the same day that BOE is going to announce its rates. So what I think is going to happen is that we can see their projection. Again, with the ECB, they don't have a dot plot, but they have something that's called their projection. I think they're going to change their inflation projection and also their growth projection. They're going to see a less, for example, a weaker growth in the beginning of 2024.
As we've been seeing all these months.
And also, for example, a better inflation scenario. And I think they're going to project that the inflation is going to come down faster than what they have talked about. But I think something very interesting about the ECB and how the market is expecting their reaction is going to be is that, do you know Miss Schnabel, I think her name is?
I've heard her name.
Yeah, she's extremely hawkish. But last week, she gave out these very dovish remarks that she said. She mentioned that I don't see any reason for rate hikes, and if we keep on the track, we could see rates coming down. So
again, fear of the inflation going away and then being stuck with the economy that is in recession.
And that was the reason why euro performed really weakly last week. And
although the dollar did not even put up a fight, it was only up 1 week in a place that we saw 8% lower on gold. You think dollar might take more from the market, but it did not. And even with this weak performance of the dollar, we still see euro this week, and that is not a good sign.
Yeah. So this week, I think Lagarde, just like Powell, is going to push the idea of rate cuts, but the market is already pricing 135 BPS rate cuts in 2024, and they see that the rate cuts are going to happen in March. And I think the tone differences between Lagarde and Powell is going to be a good driver for the value of the euro. And I don't see a lot of data coming for euro next week.
Sorry.
That's very important.
Did you say that this evaluation, that the change of tone that Lagarde has and
No,
and Powell
not the comparison of the tone. Let's see who's more hawkish. Let's see who pushes the idea of
later rate
cuts. But I don't see a very high chance for the euro to go up this week.
In that case, with what you just told me for the for euro yen, I don't think like we're expecting like a miracle happening in an upward trend, but I think the JPY might still have something left in front of euro to prove in the markets. I think the currency pairs performance was not very well last week.
Depends on the sentiment as well, because when the sentiment is not very fearful, you don't see yen going up unless there's a factor like the data or a speech.
Yeah, but I think it takes time to moderate. You know, this for the whole week, yen was the highest performing currency. So for it to have time to be moderated to the level that it normally is, to its like 200 moving average, 200-day moving average, I think it has a little bit more time and maybe the last breath in front of euro to like show something.
Maybe. And also I think how the week is going to begin is going to have an impact on the performance of the yen. I mean, how the beginning of the week is going to have an impact on the performance of the dollar. I mean, when the market opens. So for the yen, we talked about in euro, and let's talk about GBP.
Yeah, I was just gonna say, can we just like light a candle for Mr. Bailey, because no one seems to care about what he thinks, and it's like we don't know what the derivative of the British pounds are these days. What do you think?
I think just like the Eurozone, the outlook for the growth in the Great Britain is also very negative, but they have created this scenario. I think we have talked about it. They are trying to have these tax cuts, which if it's implied, it's going to help the growth of the economy.
Have they mentioned for which parts of the economy are they like considering this tax cuts?
And the tax cuts for the
is it for businesses?
Yes, it's for businesses. So that is said, if they take place, it's going to have a good impact on the pound. But if you're just talking about the monetary policy factor, I don't think it's going to be very different from the ECB and from the Fed. I think the rates are not going to change, but the number, we should pay attention to the number of votes. You see, they release a number and they say which MPC member was in favor of a cut, which one was in favor of a rise.
Basically their dot plot.
Yes, like their dot plot. So if we take a look at that, we can see where they stand and we can predict how it's going to be in the next, for example, announcement of the rate. But I don't think that scenario is going to be very different. They're going to push back the idea of rate cuts. We should see their projection for the inflation and for the growth. And if it's lower, it's going to hurt the pound.
Well, I mean, what actually worries me about the GBP is the kind of recession that we're already witnessing in the real estate sector.
Exactly, the housing market.
We have had bad numbers lately for it, and even if we have tax cut, I think the central bank of England should actually move on to the cutting rates sooner than later, and they should take the lead in this game with the other players of USA and the ECB. I think
you mean sooner than ECB and the Fed?
They could actually use the relief of the monetary tightening. I think they could.
But their inflation rate doesn't allow them to do that, because the inflation rate of the US and the Eurozone is much lower than
the speed of the rate coming down in Britain has been faster than the other ones. It started late because they actually started the cycle later, but it has actually the rates of the lowering prices, it has been faster. It's moving slow, but like each reading that we get, it's like a chunk of it going down. But I think they should be more, concerned with the cuts rather than the other central banks.
I still think there's possibility for them not to. There's a possibility that they cut rates later, because whenever the inflation rate gets closer to the 2%, it's way more difficult for it to come down. It's more difficult for the rates to come from 10% to 9% to 8% to 6%. But when it's like 3.5%, it's way more difficult to get it to 2%. And I think there are factors for the rates to go up again, especially for the Euro zone and for the Great Britain, because they are very dependent on other countries, on energy, for example, or on the things that are...
Not as much as Euro.
No, not as much as Euro, but I think that's where the US is a winner, because the country
definitely
is not as dependent on energy.
Is like, it's a big winner for them. I think once you start seeing this level of low inflation in the real estate sector, this is where they tend to stop. So I'm basing my theory on the fact that it has been here for a while in the real estate sector, and if you want to be logical about it, okay, you're cutting taxes, that's very nice, but you know that the main problem is not going to go away unless we see some kind of, relieving in the monetary side. Actually, we forgot about AUD, the Australian dollar, which was also very interesting.
One more thing about the GBP. This week they will get the claimant change, and also they will get the average earnings.
Oh, that would be important for them.
They're going to come on Tuesday. And if we see the signs of the wages going higher, but the pace is slowing, and the claimant change going higher, I think the GBP is going to start a downtrend earlier than the rate announcements. So we have to pay close attention to GBP's performance from Tuesday.
That would be the perfect combination for them to do. So thank you for reminding us of that.
You're welcome.
And the Australian dollar.
Yeah.
Actually, just like the yen was the highest performing currency, AUD was the lowest this past week. Although we were still, experiencing the backlashes of the hawkish tone in their central banks, Michelle Bullock, I still think that markets do not have much confidence in what's coming for AUD. Yeah. And their CPI, if you actually look at the previous versions, it's not that disappointing. It's like it could show more inflation coming in, and this is actually a good sign for the economy.
Yeah, exactly. But I think the real reason why AUD was performing really badly in the weekly estimate, I think at the beginning of the week it was performing really well. I think the sentiment changed, and also the impact of the good news change went away, and then we had the ratings for China. And then
China.
And then we had a little bit of a scared sentiment in the market, and when the dollar performs really well, the commodity centered or commodity based currencies do not perform really well, like AUD, like CAD, like NZD. So all of these came into factor as the dollar was getting stronger, as the sentiment was becoming more fearful, and as the impact of the China news was taking an effect. I think the performance of the Australian dollar came down. And I think the beginning of the week, just as we saw the CPI and PPI of China, that is going to come into play for the Australian dollar at the beginning of the week.
Definitely. I think China is a very important player here. And also, I've seen the chart of iron ore, and it's like the drop of prices in this commodity is like never before, and the rate that it's decreasing, it's actually very worrying. China being the main user of that, main importer, and Australia being the biggest exporter and the country with the most resources for this commodity. I think it has been hurt from this fact a lot, and the weaker outlook of production for the whole world is actually hurting AUD more than what it actually deserves, because as I just said, the CPI readings are not that awful, and I felt like this currency did not deserve to be the lowest performing out there. If maybe NZD, but even NZD performed better than the AUD. So. And one more thing about China, I know that we keep getting lower, well, mostly lower numbers for PMIs and for CPIs and the inflation and the PPI. But this could only mean more, support from the government. And I know that could also hurt the country in another way because of the amount of the debt that they hold and the deficit, as you said. But I do not think this is the kind of data that we can, trust upon and build a scenario on that.
But at the beginning of the week, that is going to be the driver. Who knows what's going to happen in the middle of the week and at the end of the week? But at the beginning of the week, I'm talking about Monday and Tuesday. I think that the data from China is going to have an impact.
Oh, definitely, it's going to leave its mark on Monday when the markets open. Yeah. But I'm saying we have experienced that lower numbers from China, disappointing news from China, it only leads to more support from the government because they're actually, let's look at the bigger picture. They are in it for basically the dispute that they have with the United States. So they're going to play out all
their cards,
all they have, to just try to make something out of this.
More?
That is the thing that we should, I think we should be more equipped with numbers to be able to talk about that from the debt and the deficit that we just mentioned.
It's the highest level of deficit, budget deficit and debt in 20 years, in 2 decades. And it's very worrying. And we see the performance of the property market really
the
down.
Market. But in short term, how it comes out to the ear of an investor is that more support from the government. So it might not work in the long run. I would love to have an episode about that. But in the short term, it has proven that we're just going to see maybe more interest rate cuts from the Central Bank of China. Is it the People's Republic of China, even the central bank?
People's Bank of China.
People's Bank of China.
People's Bank of China.
Yeah, maybe more interest rate cuts from there, or maybe more support. Do you remember when the Evergrande, the whole thing was being played out? Government first said that I'm not going to support, and I also suggest to the other investors or the foreign investors to save their money because this is a lost cause for us. But we saw them coming in and playing as a supporter in that section because they know they would not be able to do anything else with such main sector being hurt in their country. So I think they have so much to lose, and I do not think they're here to leave this game so soon. I'm not worried about the lower numbers from China personally.
So let's just wrap it up. How do you think the AUD is going to perform?
I still think they're going to be hurt from the lower iron ore and the production, but I do not see China being the main player for AUD, and I do think AUD is going to show some power. I think they might have some data. I do not remember for Australia what we have this week, but I think there is a possibility that it might regain its power, at least not be the weakest currency in the market. Let's also take into consideration that these lows for a currency that just had an interest rate increase. Yeah, just an increase. They were the last central bank who increased the interest rate.
Yeah, but the last announcement, the rate stayed the same.
Within all the central banks, they were the last who rose the interest rate. And the first time Michel Bullock talked was when it comes in waves. So I do not think markets are done thinking that this is the last one. I think there's still that sentiment of higher interest rates in play
and
for
AUD. has a speech prepared this week on Tuesday, but I don't think it's going to have an impact.
Reason you need.
So for a trader who trades AUD, they have to take into consideration the sentiment around China and the performance of USD, in my opinion. And iron ore, because if USD is performing well, I don't think there is a possibility for commodity-based currencies to perform extremely well.
True.
So, have we talked about everything?
We did not mention a thing about the stock market, which I think is having a very interesting performance these weeks. I think we have seen
it's the December. They always perform well.
But it was November. The data that we're talking about, the performance of Nasdaq, DJI 11% higher, and the S&P.
Just in November or throughout the year?
No, just in November. And this this is actually where I really wanted to come to, and I wanted to have like a comparison between the price that we're seeing from oil and the performance of stock markets, and how they historically are supposed to be in the same direction, but lately we're seeing a very huge gap in the prices of them. So this for a trader, and we shall talk about it more, but this is a question for each trader to like think about privately or personally, the fact that which one is right, because one could be right unless the whole, the dynamics of markets are changing.
I think it's the dynamics of markets changing. It all goes back to the structure of the economy, where we are at with policy, monetary policy. I think that's plays.
Let me put this scenario in front of you, and you tell me what you think about it. I'm talking about recession a lot because I've been obsessed about it the last week. But in the last recession that we experienced in the United States, the same thing happened. 2016, I was gonna say, but
2020 there was a recession.
Yes, there was like a mild recession, but even 2020, 2016, and 2008, the same thing happened during the time. And I wanted to mention the 2008 recession because we had the same experience with the rates. In the other ones, we cannot compare the situation because the rate, the interest rate was not in the same level as then. But 2008, we experienced the recession right after the Fed stopped raising and was pausing, So the stocks, because of the inflation, inflationary expectations, were actually surging. They were like they were seeing the higher inflation. I'm sorry, before the thing happened, because we were expecting a lot of increases in all of the stocks and they were having a very good performance. But once the recession started showing signs, the price of oil fell, and so did the stocks. So we could actually see some scenario like this. So the question is, are the stocks overpriced, and we can like expect a new crisis in the coming year? Or
a lot of people
is the oil, or is the oil like in a lower prices, and we should? Is this like a historical point to like buy oil?
So this creates an opportunity for a trader to think that the oil is going to go up, and the
oil going to go up, or is the stock going to crash down?
I think both of them can be the scenarios, because a lot of people believe that the stocks index are really overpriced and they're at the overbought.
And even the sector, if you think about it, the dot-com bubble was also in technology, and look what we're experiencing. It's like a lot of, similarities happening, and the more you try to ignore them, I know markets always surprise you with something new, but if you want to learn about the future, if you don't want to learn about the past, you're doomed to make the same mistake. So we're seeing this overpriced technology stocks, a lot of investment there, and what's going to happen next?
But the boom has not passed yet. I think there is...
How do you know when a boom is passed?
Because there's still a lot of hope for AI to develop. We see great performances of the Magnificent Seven, as you have mentioned. We don't see the revenues coming down anytime soon.
Wasn't there a hope when the dot-com bubble happened?
But are we at the situation, the same situation?
I'm telling you, yes.
How so?
This is what I'm just telling you. Like with the Fed's cutting rate very soon, and with the prices of oil being down, because
are we talking about 2024, or are we talking about next week?
2008, man.
No, we're comparing 2008 and now, right?
Yes, we are.
So are we talking about 2024, or are we talking about next week?
This is a general outlook about how the prices are performing, of the stocks being very high and the crude being very low. I do not have like a specific date for it, but I could try to like make up one.
No, okay, I mean, like if you're talking about the situation where they're cutting rates, it's not coming anytime soon. I don't think it's coming in the next few months, right? It's coming in
So you're saying this scenario of stocks being lower needs more time to play out.
If we lay out a scenario of recession and hard landing, it's not just going to be the stocks. It's going to be everything. Of course, the stocks are going to perform really badly. But we're talking about the outlook for next week and the December. And historically, December is a time for the stocks perform well.
Let me put it in the next week terms for you right now. If what I'm saying is the case, and we're going to see the drop of stocks in the coming year because of the inflationary expectation and the rate cuts that is expected in the markets, the stocks could actually like continue their performance, their good performance, and it could actually go up until they cannot one day. So this is what I think for next week.
Of course, for next week, but I think if we're just taking into factors that come into play, I mean, the rate decisions and the performance of the US dollar, because that's a main driver for the stocks. I think if we see a possibility for the dollar to rise, we could see the stocks performing not as well. But if we take into consideration the historical seasonality of the stocks, there is a possibility for the stocks to finish the week higher.
What seasonality of stocks are you talking about?
Usually in December, the stocks indexes, they perform really well.
Just like they did in November, the best performance.
And they can continue their performance. And once we see the actual signs of a recession, because we don't see them yet. In my opinion, there are a lot of supporters for the recessionary scenarios, and I think it's going to happen maybe in the middle of 2024, maybe by the end of 2024. But
which I think like a small portion is actually necessary and needed for the markets to feel better.
And I don't think the recession is going to be as big as 2008. We have a lot of people who support the idea of a really bad recession in 2024 because of the signs, because of the similarities. There are a lot of charts. They show rates, they show this and that. But I think if we get to a recessionary period, it's not just going to be the stocks. It's going to be everything. Then we can talk about gold reaching another all-time high. And because it's very undervalued, they say that the gold is going to go to 3,000, 3,500. So there's the possibility of that. So the whole narrative, I think, of the market is going to change in the case of a recession. But
that is true.
Yeah. In my opinion, it's not going to be next week. I think the performance of the stocks is going to be mixed, and it's going to be very related to the performance of the dollar and the sentiment around. I think the stocks, because we don't see a lot of fear right now.
In stocks,
the investments. We don't see a lot of fear from retail traders. We see a lot of fear.
They're enjoying the write-up.
Yes, we see a lot of fear from the big ones. They know that when the stocks go up, as you mentioned, it comes down. So we see a lot of greed from the retail traders and a lot of fear maybe in the small players. But I think the performance of the stocks is going to be mixed.
But for next week, what do you think? How they're going to perform?
The last week of December?
Yeah.
I don't think it's going to be bad as well. It's the last week of December. It's going to go up.
Where could they go?
Yeah. And then we don't have a lot of data then. But maybe we can have different scenarios in 2024. So we talked about everything.
We did.
Did we talk about the sentiment as well?
We did, and while we were talking about it, we could revisit it if you want.
No, I think we mentioned it. I think if nothing geopolitical happens, like we mentioned.
We just said that last week.
And we don't get any negative things from China, I think the main driver of the sentiment still is going to be the rate announcements by the banks.
For sure. We have so much of it later this week.
4.
Well, I'm so excited for all of it.
Yeah, we're going to check how it's going to go next week. So shall we just go?
I think we should go.
Okay.
Yeah.